Hi friends, let's take a look at Link versus Bitcoin, Link versus USD, Link versus Ethereum. I'm starting off here and I've got the monthly up, and I want to remind people that you should watch the Bitcoin episodes because they're really fantastic, and the Ethereum episode, which includes technical analysis for Bitcoin as well on the monthly, so look out for that. Really, really good stuff. Look at all the videos today, and as well, there's a day left here. This is the final day, or we're coming to the end of that competition period, so make sure you write Rocky U Rock down below if you want to win 10 Satoshis for every view that the channel gets this month. We're looking at giving away a couple hundred Satoshis, right? A couple 100,000 Satoshis to one lucky winner. Link versus Bitcoin, you can see this big pullback in the prices. Okay, now what's happened here is we've had a big pullback. Looking back in time, right? This is obviously linear. Let me just put it on log so you get a better perspective about things for this in terms of big time frame. You can see that we've had a big red candle, okay? And this has happened in the past numerous times as we've gone up towards the top side. We haven't engulfed this previous one. And what I'm looking for is, in terms of the negative trend, in terms of really kicking your teeth out, would be us having two, because it looks like we're not going to get one. But if we do crash right the way down here below 71,000 in the next day or so that we actually have a full-on engulf, or 65,000, so we have a full-on bearish engulfing candle, that would be the first one of them that we've really ever had. Instead, what I'm looking for is this type of a setup, perhaps where you have two candles, where if you add them together, it kind of bearishly engulfs the previous candle, rather than and see if that happens next month, or if indeed we have a turnaround. But that's just a very broad term perspective thing. Things are looking okay in terms of this front. If we move this down to a small time frame moving average, then you can see that in terms of the 9-period exponential moving average, that we're still doing well on the monthly. You know, everything's good. We've come in and we've retested that. That happens all the time in terms of these long, broad term time frames. Putting that back on 21, and there is a lot of room to maneuver if we were to come in and test that. Anyway, I'm taking it off log again so you can see how that point was being made with the log charts, because you know it's harder to see there when I have it on linear, right? And going over towards the lower term time frames now, just starting off on the weekly, seeing that we've come in and retested the 21. So in very many ways, that's a bullish thing to have actually, you know, retested this and found it as support, having come in here, and we didn't actually successfully retest it back there in August. You know, it's taken this further downside price action to happen, and we came in and we hit our targets towards the downside. Can we actually move towards the top side thereafter? Now, going down towards the 21, towards the daily time frames, we can actually see the 21 EMA on terms of days. You can see that there's still this bullish cross scenario with the 50 simple and the 200 simple, the red dotted line and the white dotted line, and we're still above certain things, having, you know, found support right in here, bang on the 233 exponential moving average, this pink line here, but we're below the 21 EMA, and the 21 and the 55 have crossed, and that's fairly negative. We haven't fully tested the 200 simple. Could we test that? Yes, we could. This would be kind of, you know, the dodgy type scenario. Going back up towards the monthly time frame, though, that would just simply be coming in here and retesting these lows before moving towards the top side. Could that then end up ultimately being next month's wick with a green candle on there? Well, it could be, so let's just see how it all pans out. That's what we're looking at, really, and can we move above it? Now, if we move above it in the next day or two, that would be very dandy, nice and handy, because then we could see these things cross back again in fairly quicko succession. What we actually have here is a degree of actual hidden bearish divergence, though, with this high, so that's not particularly fan-dabby dozy. And let me just put the drawings back on here. Oh my god, that's scary, don't be alarmed. What we actually have here is two things at once. Now, we've come up and we've retested this inside pitchfork that we had on the go in this area just here. We need to see targets being hit, like where this green line is up here at the 50 simple moving average, for us to really turn around and say that the macro is kind of changing its picture. But we do have two ways of getting up there at the minute with these two measuring sticks that we've got, which actually show us the measured move off of this descending wedge area that we have on the charts there. So that would be handy if it did get touched. If either of those things got moves played out, because that would be taking us up towards all of these different areas, which are really crucial. For instance, the 50% Fibonacci retracement, the 50 simple, our wee green line there, and going past these two areas of the pitchfork. Now, right up above our heads, we have this resistance of the pitchfork itself at the 21 EMA. So you can look towards the 21 EMA if you don't have this drawn on your own charts for a quick sort of a idea of whether and how we're performing with relative to the pitchfork here. But in terms of the negativity, you know, okay, so it's negative, but what we've done is two things. We've stayed above the 236 here at 93k, and we have retested this wedge formation so far. So if we do then see the prices turn around at this point, that would make perfect sense, having had this as a retest, and very good, you know, for the positive case. Breaking down below the median line of this parallel channel in the background, though, could see us coming back down to what could be a sort of temporary or a midterm key area for us in and around about that 86,000 area where we have the 144 exponential moving average as well. Looking at this thing, that would be, you know, of course, quite important for us. Turning this into hidden bearish divergence, perhaps on the stochastics and the DMI. No, the DMI has not got that. It's just bearishly convergent. And hidden bearish divergence potentially on the MACD. Yeah, it's the MACD, the stochastics, not the RSI currently really, although it's close call, so, you know, but it's not. What we want to see happen is for this to come up here and take out these previous highs, and really we need to see that picture start with 117,000 Satoshis. Moving over to the dollar prices and getting rid of this stuff again, which has somehow made it way back onto my chart. It mustn't have saved. That's so frustrating when that happens and I have to remove muck 2 days in a row whilst filming episodes. You know, I was looking at charts last night and everything was fine, but I guess when I restarted the computer earlier on, damn, I hid that one instead of removing it. They just, you know, it didn't save, whatever. Looking at these two areas, you know, we have this big box over here. That's obviously key for us. We have this swing failure point, which, you know, we've managed to move up above, but we need to see it being remaining the case. Of course, that is the case currently. But if we do drop down below it, I don't want to see the prices going down actually to the bearish control zone. I want to see them staying above this swing failure area. I'm looking towards that first off, really, for us. And this moving average here as well. The other sort of thing that I would be looking to in terms of resistance, support and resistance on this RSI would be in and around this area just here at 43. I want to see it staying above that, which means essentially that translates quite easily to saying I want to see it staying above the exponential moving average that I have on that RSI over there. On the stochastics, by the way, you might be wondering that I actually use a exponential moving average instead of the standard simple moving average. By the way, this is what it looks like in the background if you use a simple moving average. I prefer to use the exponential moving average. It's obviously, you know, there's no hard and fast rules about this sort of thing. That's what I'm looking at there. Can we do this? Now what we have at the minute is the ADX burning off and coming back down below 25 and now into this 25 to 20 area where it's orange. Can we see this? Can we see this kind of turn around? Will we see the two lines, the yellow and pink, converge a little and cross over? And will that happen while this is still in a positive territory? I'd want to see that happening, but currently actually what we have is still just a status quo, and that is going to remain the case until we're above 1288 and we get one of these two targets really kind of satisfied and locked in place and moving above the 50 simple moving average here on the 24-hour time frame. Of course, we have this descending triangle here, which we descending wedge, which we broke outside of so far, and we haven't actually had the measured moves off of. We have this roly-poly top here with the 55 and the 21 EMA kind of coming in as resistance in there. Haven't achieved a 618 Fibonacci retracement. So while if you were to be looking at this is obviously a key profit taking point for people who are counter trend trading this and shorting and longing it from the lows down here. Just like Kevin, shout out to Kevin, by the way, who did this really well and took profit in there at the $11 area at the 618, just as you should if you want to be a pro trader. Well done, Kevin. But now we're asking the question, like, will we actually push on from this or not? So we want to see a local low coming in. When is the local low going to be? Who knows? It could be any of these areas all the way down again. So long as we're above 758, essentially we can be putting in a local low. I want to see $8.69 being respected. Of course, that's a 20% drop off or a 15% drop off from where we are now. So that's obviously a tradable event in and of itself, but I wouldn't want to see that going down any lower than that. And in fact, the 382 over here is going to have to be kind of key for us in a lot of ways, because if I go down towards the 1 hour time frame and instead look at this from a different perspective, bring it up full screen and say, well, what about this upward side movement here? How have we fared versus that? And I'll use a Fibonacci retracement just to provide the context for the viewership in terms of our movement so far. Drawing that in wick to wick, you can quite clearly see that we dropped back down below the 236 over here at $10.32, and now the prices are $10.10. Cowboy prices 10 to the 10 to the 10, 10, 10. and we're looking down towards 382 at $9.77, and whether or not this the 382 over here gets respected at 9.58, and where we have this 200 simple moving average. Now, if we do see these things get respected and we have our shallowest retrace and then move towards the top side, great. If we turn around from right here, great. And if we do it from right here, it's actually better because this is a higher low than over here. And we could start to look towards this as having been a bottom. And why would we do that? Well, if we look between the lows here at this point, you can see that they're very much bullishly divergent here. So we've had this kind of potential as a bottom. And what we see here as well is that there is a negative trend emphasis for us with the DMI. So I wouldn't get too carried away with that. But what we actually have as well is bullish divergence really between these lows here on the DMI. So you can see that there's a good justification for saying things either way with relation to certain targets. I hope that integrates well enough with what you're looking at in terms of your technical analysis to help you trade this like a legend, or indeed to be more precise, to trade it like Kevin, who's done a great job. Shout out again to him. Kevin King, good guy. You'll see him commenting down below. Aspire to be like these good traders. Join the Discord, get in a community which knows how to support you as a trader. Looking at this here, we have on the 1 hour time frame certainly a negative cross between the 21 and the 55 EMA. We're looking down towards that area of the 200 simple, having not got bullish divergence coming in here on the lows of the RSI or the DMI, but it is there on the MACD, and we can actually as well look towards this as being a potential for a wedge here on the 1 hour time frame, where I'll draw it in but then go and review it a little bit closer in terms of the larger time frames. I'm tempted even just to draw in from this area. In fact, I will, because there's also the other sort of potential for, if I just use the wicks here instead, I could say this is perhaps a descending triangle, and that'll be the sort of the key debate point here for us over the next wee while. Going up towards the 4 hour time frame, how does that look? And in fact, it looks like an Adam and Eve, very much so. We pointed this out yesterday. We have this Adam structure and this Eve structure, very much coming in as an Eve now, wider than the Adam. And of course, this then represents a neckline for us as well. So that's giving us a confluence of different things. Movements down past this area will get us a measured move, which could be either of these. Let's just draw it on the right hand side so you can see that this is indeed, as well as this triangle move, this is also the Adam and Eve move, and that would take you down towards lows of 0.025. We don't want to see that. Instead, we want to see it fail, and movements up above this area could take us past either of these two peaks, this twin peak here, and show us the good time at Charlie up there at the 200 simple moving average. Of course, that would be a key profit taking area for us in terms of this lower term time frames. I don't know how many people trade Link versus Ethereum, but that's what we got to look to. Do either of those things as well, and we're busting past the 21 and the 55, giving these a chance to turn around away and move towards the top side, and giving us a chance to have a bottom here in terms of our lows and everything else, finding support at the 200 simple, perhaps going on towards continuing the trend, which is an overall macro upward trend, which has got, you know, a hidden bullish divergence, lows coming in here with this low versus this previous low in the 24-hour time frame. And we've also bust past this swing point here, because it's a crucial area, but we're retesting it just now. Will we see it be able to sort of recover and move towards the top side, perhaps using the exponential moving average if we need to, and then move past the neutral, or will we not? That's the key areas for us. We've got a bullishly divergent MACD in this area, giving us an overall macro looking wedge, which encompasses the wedge that we've already discussed, and disgusting wedges. We've discussed wedges with disgust. It's kind of channel-esque actually in the way that this is forming up. So this is maybe a failed sort of idea. Maybe if we do see this go down the way, then of course we see that as our target down where we have this circle crossing over, you know, where I've already pointed out as being a target there at 21 as being key for us. But if we don't, then of course we're moving on up the way, and the next target is quite clearly 36. Either of these offering up great profit taking targets for us. I'm going to leave it at that. Now, if you want to take part of in a Bitcoin giveaway, where I give away 10 Satoshis for every view that the channel gets this month, then all you have to do is write Rocky Rock in any of the videos that I put out this month. Of course, there's like lots of them. There's about 120 of them this month. So there's a lot of entry for you to be able to put in. A lot of entries. If you want to go ahead and do that, you can do it all 120 times. That's all good. All those raffle tickets. That's cool. Be sure to watch the Ethereum and Bitcoin videos. They're really good. They'll help you become better traders. I swear to goodness. By the way, this is of course the Rocky Outcrop show here. The Rocky Outcrop show here, and this is 100% quality technical analysis. So be sure to share that with your friends, and of course come back for more tomorrow when I'll be back and we'll review everything that we talked about today and see how we're getting on. For the best technical analysis on YouTube, youtube.com/Rocky Outcrop, the place to be. Bada bing, bada bee. I'll catch you next time. Mwah.